Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Hello, everybody. Drew Dosick here, and welcome to Trading the Close. Guys, today we did have some earnings reports hit the markets. Some of these stocks did fall and crater hard. We're going to get into those on Pinterest and SMCI. But today, the selling pressure overall for the markets was basically alleviated. We had a nice little bounce, and you would have been able to understand and anticipate this had you been a member of our Gann cycle report. It's one of our new services talking about cycles in the markets. I posted last night saying we're looking like we could be moving up or at least have some sideways price action over the next day or two. And it's mainly from what we're noticing in this course in the cycles. Okay, so let's jump into the market summary board, check out where everything finished today. Here we go. All right. There we go. All right. So we've got the Dow Jones up 0.42%. NASDAQ is up almost 1%. S&P 500 up 0.39%. U.S. oil down 1.31%. Gold is up 1.29%. And Bitcoin rallying back pretty strong today as that was under $100,000 yesterday. Very interesting to see, but still not really out of the woods at all, folks, as that is and has been seeing a lot of selling pressure. So into the S&P 500 heat map to see where a broader view of all of the stocks. And as we noted, with the indices moving up, there's not a lot of red. There are some pockets of red, though. We've got ANET down 7.93%. We've got NVIDIA down 1.5%. Microsoft down 1.43%. But Google and Meta both pushing up. Google at 2.48% and Meta at 1.6%. Tesla up at 3.95%. We were talking about that chart yesterday. I still think that chart potentially has some more upside to go. All right, so let's go into the S&P 500. And you can see here today, price action was nice as far as the green day in the markets. We pushed up higher, but notice what we did. We came and pierced the top end of this parallel and got rejected. So this parallel is still containing the power and guiding us with price action on this chart. One thing to note, we did come into this parallel yesterday, but we did not confirm in the parallel today. So if we still continue to poke through the top end of this parallel, that will alleviate and then allow price to push up to the next resistance at gap fill right around $683.33. Be watching very closely, though. If we get a close underneath this red candle from Tuesday, just yesterday, which the low is $674.58, then we're going to be headed lower on the charts. Next stop here, gap fill at $671.86. Next up, we've got the QQQ. Q's not as strong as a pop as the spiders as we've seen, but still moving sideways and going to close the day within yesterday's candle. So that kicks the can into tomorrow. Same situation. Can we close underneath this big red candle today or from yesterday on Thursday? And then we're going to have price action then accelerate down to the next support at $612.69. So we'll see if the earnings after the bell today will help push in either direction, give us better insight as to near-term price action on the charts. Very similar to the spiders, look what the SMH did today. We had a breakdown yesterday, and then today tested the top end of this parallel channel, and then selling pressure took over and pushed price right back down. Just to see how that works, you can see right here on the 10-minute chart, we had a great move up today, and as soon as we hit the top of that parallel, the selling pressure unfolded. So it tells me a lot of investors are eyeing this longer term parallel that we've conveyed here on this show for quite a while, guys. This goes back to August of 2024 and still influencing price action all the way on the 10-minute chart today. It's fascinating how technical analysis does work on the charts. All right, so yesterday we did talk about the IWM, and I was saying that there could be a potential bounce from the candle formation that I was finding here, as this is all part of my sleeper hold setup that I go about through one of my educational courses. Great insight for that too, because look at this pop on the IWM. Now, this run may not be over yet, folks. Normally, when price breaks down on a long-term trend line, which is the bottom end of this parallel, we're likely going to go back up and test that parallel. But since this is so sharp, we're running into resistance with these 3 days of trading right here. We filled the gap from Monday, but will we continue up higher on the IWM? We certainly could in the next couple days. As I said, since we're in the midst of earnings season, earnings are certainly going to help paint the picture for a potential chance to retest this trend line right at $247.89. One thing's different though about the IWM. This is a confirmed breakdown on this parallel. So if price does come up here, you can expect a lot of selling at the bottom end of that parallel channel. Next up, Bitcoin. As we see here, Bitcoin plunged yesterday through this area of support, this declining trend line. And today we went right back up and kissed that trend line. Again, technicals are really amazing. And the markets, guys, the markets love to whip people out. They like to whip weak hands out, stretch you to your limits, thinking Bitcoin's going to collapse, and then it just runs right back up to the trend line that it just broke yesterday. It's just a lot of whippy price action, and it's really been occurring this last month or two here in the markets. It's been a very tricky market. Some stocks continue floating up all day. The other stocks just sink down and sell all day. Very unusual price action going into the end of the year. But Bitcoin for now, it's not out of the woods. As we see here, we need for it as far as the bulls, you want to get back above this trend line, but ultimately you want to get back inside this inclining parallel channel. Trend line at resistance, $104,629. Parallel resistance, $107,365. Next level of support, if we start selling off down here, $97,662. Next up, gold. Not too much to report today, except for still bearish consolidation. Yes, we had a nice up day, but notice price is just hovering right above the support level at $3,918.52. The longer this consolidates, the more momentum builds for a potential breakdown and further price action down on the chart. Next support, should that occur, is at $3,754. Next up, we've got silver. Silver, as you see here, also consolidating right on support. Grander move, big down move on the chart, and sideways consolidation. That's all still bearish, folks. Even though we were up here at one point, we didn't consolidate up here. We then plunged down, and now we're still making this sideways consolidation all at the bottom of this big red candle. That implies more downside in the near term for silver, $44.26 next stop, followed by $41.26. Next up, U.S. oil. Notice U.S. oil did break this consolidation. We now closed underneath these wicks. That now then can potentially bring us down to the next level of support right here at $58.49. That will be the next area that should provide a stop should U.S. oil continue moving down. If that breaks, now we're talking about the most recent pivot low down here at $55.99 for support. But this right here, price action was consolidating, now starting to break that. We'll see if we get a further move down tomorrow to that first level of support that I just mentioned. Up next, we've got Nat Gas. Now, Nat Gas, as I've said, we really were extended on the charts, had a great move up and tagged the 445. We likely need to cool off a little bit on Nat Gas. That's what happened today. We'll see if that continues tomorrow and the following trading days. We're looking down here at 408 as the next test for support for Nat Gas to at least start gaining more momentum for a potential move up higher on the charts. But right now, near term, I think this is a near term top, and near, as I mean the next week or so, at $4.45. Next up, QCOM. Now, QCOM, as you see here, does have earnings after the bell. So far, price action is moving down slightly. Wanted to give you a little preview on some levels that I have here. And you notice QCOM in a weekly inclining parallel channel. And where have we been stopping this week on moving up? Right here at the 50% area of that parallel. You can even see last week too, we surged up here, kissed this resistance right around $200 before plummeting back, finishing the week inside the bottom half of this 50% area of the parallel. That's not necessarily great when we have big momentum fail that quickly and that sharply on the charts. So for me, and earnings are a coin flip, folks. You really, it depends on how they report, what they're reporting, what their guidance is going to be. So there's a lot of variables to then predict where price is going to go after earnings. First major support, if we have a big sell, is down here at 153.39. Should we rip higher? The actual initial resistance is this 50% area of the parallel. Since that's so close, price is likely going to get above that area at $184.26. Push up here to where you see these pivots that occurred back in the weekly chart on the week of June 24th, right around 193 to 207. That's the big resistance zone on earnings as far as today's price action. Next up, we've got Pinterest. And Pinterest, as you see here, did miss on earnings. They missed on earnings per share, but they did beat on revenue and actually had decent numbers, even though their numbers didn't meet analyst expectations. But you see here, investors reacted extremely negatively, pushing the stock down over 20% today. Now, this is the daily chart. Let me show you on the weekly chart. We've got a very long-term trend line coming back from the COVID lows, folks, strung out over here to the pivot low in May of 2022. You can see now we're getting very close to tagging that trend line. This should be a very solid level of support for Pinterest in the near term, especially considering we're down 20+% today. A bounce is likely to occur and could take us all the way back up here to the $30 range. Considering it's at $25, that will be a very nice, almost 20% potential push before we see resistance. Of course, understand there's a lot of variables also in the markets, right? So if the market starts selling, Pinterest is likely not going to rip up to the top end near this declining trend line anytime soon. So be watching the overall sentiment of the market, but this big 20% haircut likely should generate a bounce in the near term for the chart of Pinterest. Next up, SMCI. SMCI also reported, but you know what? They came out and pre-reported just the other week saying that they were going to miss earnings, and that's exactly what happened. They had a earnings per share miss of 6.58% and a revenue miss of 14%. And then the stock, as you see here, plummeted down, now closing the day down 11.33%, cutting through this longer-term inclining trend line from November of 2024. So the selling pressure continue. We will have support amongst this consolidation right around $40, but then you'll have another solid level of support at $38.40. What happens when trend lines are broken? They normally like to push through either to that 40 or 38.40 level, and then bounce right back up and retest that trend line, which is currently right around $43. So you could potentially thread the needle right there, get yourself a little bit more than 10% on a swing trade should we see continuing selling pressure in the next couple days. Next up, we've got SNDK reporting earnings tomorrow after the bell. And if you see here, I've got the hourly chart. This is the 1 hourly chart because on the daily chart, this inclining trend line is so sharp, guys. Look at that move that's going on here on SNDK. Now, this is a memory company, so it's going along with plays with the data centers. But on the hourly chart, all this price action becomes much more clear, and we could see we've just been marching up in this parallel channel, currently now facing resistance at the 50% area of this channel. Yes, we're at all-time highs here on SNDK, but we're also right into resistance. Notice what we're doing on resistance. We're consolidating right on the resistance, right underneath it. That does imply we could actually go up and tag this 235.23, but earnings tomorrow will be the determining factor on that. If it was anything like Pinterest and we could drop, say, 20%, we're going to be looking down here at the $172 level for a potential correction, which also corresponds with a gap fill right here at 175.49. Next up, we've got Take Two Interactive. This was a viewer submission, so thank you so much for sending some of these charts over to view. Take Two also has earnings tomorrow, so this was a great timing to look at this chart. So take a look at this. So we've got Take Two Interactive on the weekly time frame. Okay, let me scroll out so you can see this longer-term inclining parallel channel on the charts. Very much like SNDK, we're starting to come right back up into resistance. A little bit different though here, because if you notice on the weekly chart, we actually got above the 50% area, but then we're just hanging out here. And whenever price consolidates on top of a support and or resistance level, it likes to just go down and break down from that level. So whenever you have this, you've got to recognize that, yes, it did break up. It did confirm up inside the top half of this 50% area of the parallel. But this sort of price action is telling me it's a little bit weaker. We should have had an accelerated move, then a retest down to this 50% area, which then could act as a springboard to accelerate price action up on the charts. But as you see here, that didn't happen. If you see on the daily too, we've just been retesting, and then now really tight consolidation on top of that 50% area. That tells me price likely should be coming down to hit this trend line roughly at $237.73, potentially after earnings. After it hits that trend line, it's anybody's game. As you see here, we've gotten rejected from that 50% area before. And then since then, if we get rejected again, that wouldn't be that positive for upward movement, but these trend lines can generate significant bounces. And on the horizon, we've got Grand Theft Auto with Take-Two Interactive, does own the company that does make Grand Theft Auto. That game should be released next year. I anticipate there to be a lot of interest for it, as that's one of the most popular games that does literally last decades once they do come out, folks. Quite amazing. All right, guys, that wraps up trading the close. Thank you guys so much for watching today. Please don't forget to like and subscribe. Also, send this out to your friends and family. That way they too can also learn technical analysis, see how to anticipate moves in the stock market. All right, guys, I'll see you on the charts. Until then, we'll have the show up, last one of the week tomorrow. Take care, folks.